All right, guys, Sam here. We are mid-morning, December 7th. Had a request from a member to take a look at Zcash to the dollar tether. This is a good choice today because there's some things to learn here. And as we sit here on December 7th watching Bitcoin just blow all of our minds, it's not a bad idea to look in, some other places because, I would tell you if you're not long Bitcoin, now is not the time to be buying it, but that's just my opinion for what that's worth. But there's certainly other things moving today, and while many of the alts are just getting crushed, certainly those that are spread to Bitcoin, it's just devastation everywhere you look. We have major coins here like Zcash to the dollar that this is trading at almost $300. If you come over to to our scale here, CoinGecko, it's as I always tell you, 50 or higher. It's at 67. It's pushing in on $1 billion of market cap. I mean, this is a major crypto. Been around for a year now. Genesis date is the 28th, so it's relatively new, but that's a pretty remarkable. That's pretty remarkable growth, it's a well received. There's a lot of good. I won't try and sell you on the fundamental side of it because that's not what I'm about. But there's plenty of research to be done here to understand more about what Zcash is all about. And as we come to the technicals here now. The chart is so ugly against Bitcoin. There's really nothing to see there, nothing to learn. But in this chart, there is quite a lot to learn. So when you first look at this, right? So sometimes I will often tell people, if the Elliott wave is not just so obvious that you can't help but see it, like you see here, right? Then sometimes it's kind of the trader's choice as to whether you want to try and go in and finesse the details of the wave structure, because a determined Elliottician can always get a count on it, right? So we can always find some count, whether or not it produces anything that's meaningful in terms of finding a trade. I suppose that's somewhat subjective, but I would tell you that there's a place and a time for it, and it can add value when you're trying to figure out what's going on right now at the right edge of the market. And as I typically will do in these videos, I want to backtrack a little bit just to get a handle on whether or not the market is this crypto is trading technically. Do I see evidence of algorithmic activity? Is it moving in a way that would give me some sense that there may be some predictability to it? Are there pivots that are significant technically, or that qualify or disqualify perhaps an Elliott count? So when we first look at this, so this is the 4-hour of Zcash to the tether on Poloniex. So first, and again, I've been doing this for a long time, so it's almost impossible for me not to come over here and see that I've got a 1, 2, 3, 4 doesn't overlap it, and I come up for a 5. All right, so I can put that actually we'll put that in a larger degree. Okay, so I can't help but notice that is very technical. So I've got an Elliott wave structure in play there. But now after that, we've had potentially we've had failure swings. We've had some sort of a pump here that then was immediately given back. And so, as I look at that, my first thought is to just do this. So I want to sort of divide it up, because I just kind of see a range. So if I wick that high off and then I come down here and do the same thing here, I'm going to use this one and I'll show you why. So what I see there is I'm just stuck in a range. So even having done that, if I divide this, if I put my fib tools on it, and I'm going to take that, I'm going to put it on the 50. Right now I'm going to take this off and just kind of look at what I've got there. So I had an impulsive move here. Then I did get a technical correction. So if I open that up, you can see that this was something that we were trading, and there were a couple of fails and a couple of stops here. Let me get this did trade technically. So we had the A and the B and the C, and if I recall from when we were looking at the long side of it, we had this action here. Yeah, so it came right to the 100%. So this is a combination of things. So we have an Elliott wave structure here that's very technical, doesn't violate any rules. All of these pivots were meaningful and predictable. And then we get the very traditional ABC, the typical correction, and we get almost to the tick. It misses it by a tick. The length of A projected from B equals exactly 100%. And interestingly, we double top here. So there was, as I recall from earlier in the year, there was a feeling that we had the correction in, not a feeling, we were analyzing it. Let me rephrase that. So this, as you can see, there was the potential for that correction to be complete, and that we had a 5-wave structure here. So you can see it. It's not hard to spot these once you've been doing this for a while. So there's that. So let's put that on a smaller degree. So I remember this trade well because it looked incredibly technical. So we had the potential here for a leading diagonal, right? So the 4 overlaps the 1. So if the correction is in and that pivot is technical, we get a 5-wave structure. And then yet again, so at that time, again, I'm just, as I chart this up, I'm remembering this. So we thought we had here, we had an ABC. So but knowing that a wave 2 can go as deep as the 786, technically, as long as it doesn't violate the low here, you could stretch and say that you had a 2 there. So if you look at this, amazingly, if you look at this, if I get that right on that low, okay, and I wick that, I'm going to wick that right there, right? You come over here, it does not overlap it. Doesn't overlap it. In fact, I think I'm off. I think it skips it, misses it by a tick if I get right on it. Yeah, so if I blow that up, we miss this by a tick. Look how close that is. Right? We miss it by a tick. So, technically you could make the case that still could be a 2 because note here we get the ABC in that, right? So it's deep. I know I traded it there and was stopped out. These are as you know from looking at my videos and what I'm doing. If I'm going to take a stop, I'm not going to take a big stop. I'm not going to take a big hit, right? Little jab. Stopped out, and you wait to reevaluate. Well, so again, you can see what happens here. So we get this ABC. So if measuring it, I'm looking for clues. Do I have a pivot there? Do I have a pivot? Well, look. So we do this again. So it's not exactly to the tick, but it's about 3 ticks shy of the 100%. So yet again, let me make sure I've got it right on it. So look, we're getting. So do you see that? So we've got an ABC here to the tick. Then we get another ABC, it gets front run by a tick or 2, but we, in effect, we're double bottoming, right? So clearly. So could you still make the claim that you had, if I go to a larger degree, that I had a 1-2? Well, that's a stretch. Would that be your 3, that your 4, and we're off to the 5? You're kind of stretching a little bit there. Again, technically you could make the argument that as long as you don't overlap that, but would I trade that as a 2? No. So did I buy that? No. I was a buyer in here. We thought we had an ABC and we had a 1-2, so I remember being a buyer here, stop on the other side of the 65, and just didn't work for us. So I took a small loser there and then have been just kind of waiting for better structure. So let me strip this again. Take note here of this. We go right up to the 618. So hang on. Let me pull some of this off so I can clear up the chart. So, all right. So we get that off. Okay. We've got our little swing lows here. So you could make the case, right? So if indeed this is the case, then how could that work in an Elliott count? Well, we'd have another diagonal. So we'd have a diagonal followed by another diagonal, which when you're kind of trying to find a way to make it fit, that typically is my thought would be find another market, right? It's not good enough here. It's just not good enough to put money at risk because we're trying to squeeze in a count unless you're just bound and determined to get long in Zcash to the dollar. We got plenty of other choices, plenty of other places to take our money. But from an educational perspective, what I would be inclined to do here, because we'd be making the assumption that we have leading diagonal followed by leading diagonal. Now, if that is the case, I tell you one thing: if that's 1 2 1 2, well, Zcash is going a hell of a lot higher. But I think that's too much of a stretch. You're trying to squeeze something in there, and I don't see that. So we can leave that there. Let me lower that degree, because here's where, having some knowledge of Elliott's structure can be useful to you. So the other potential is here, and I'm lowering these degrees to show you what an alternative count is. So the idea being, well, if that's not 1 2 3, right, which a month from now we might come back at this and see that. But if that's not, what else could this be? Well, we certainly have the potential on a larger degree that we're putting in an A, this is a B, and this is a C. Now let me change that degree and sort of walk through it. Let me put this in white here so we kind of understand what else could be happening. So that certainly is a possibility. So we'd have A, right? So we're getting a flat. So we're getting an A, a B, and a C, right? So if that's the case, then we'd be looking for a relationship. Here. Do we get a relationship between the A wave projected from potentially the B wave? Right, and it's not perfect, right? There's the 618 of the A. Ideally, the double bottom, is your tell. But as we rip away from that, but ideally, you would have liked to have seen that come down here. But then, how does this work? Because I can see I've got a 5-wave structure here. So I know from reading my Elliott wave training that a third wave, a B wave, has to correct in 3s. Well, here's what you likely have if this ends up being the count that we end up with long term. So we have the potential for this to be an ABC within the ABC. So let me change that color and lower the degree so you get a handle on that, because this does work. So this is a candidate here. So we get an ABC into an A, then we get a B, right? So then we get this 1 2 3 4 5. We overlap slightly, so we get an ending diagonal into a C wave to complete the B wave, right? And then we get this ABC down to finish the C here. So potentially, that's what we've got. So given that, just to get a sense of when you're going back in time, the point of doing it is to try and identify the significance of the pivots. Are these good pivots for me to continue to project off of? Are they, ultimately not going to have meaning to me technically? Are they significant pivots? So if I tighten that up here, well, so I've got the shift pitchfork here, right? So if I start with that and I'm at original recipe here, right? So I suppose you could make the case here that the failure to make the median line, trading principle number 4. Andrew's median line, trading principle number 4, a failure to make the median line. So the fact that we don't get down here, right? So what does that say? If we don't make the median line, it's implying strength in the market. So the expectation is, per trading principle number 4, that you see a move equal to or greater than the prior swing. So the expectation is that this move is equal to or greater than that swing, and sure enough, look what we get. So then I start looking at that and go, okay, well, wait a minute. Let's look at this relationship. So I'm going to pull from there. I'm going to go down to this. I'm going to look at that. Well, that's kind of interesting. We go a couple of ticks shy of the 618. So the point of all of that is telling me that these pivots matter. These are significant pivots. So the fact that I come just a few shy, potentially, likely a front run here of the 618. So I'm feeling good about these pivots. So this gives me, we could have a couple of things here. I think we've got an ABC and then a 1 2, right, rather than a 3 4. All right. So if this is how we finish the correction, and it's kind of interesting to see how these play. So having looked at that, then I would start. This is kind of the work you need to go through in trying to put the puzzle pieces together. So then I would look at it. With the shift adjustment, right? So we've come down 50% in price. I'd look at the modified shift as well, see if I can dial it in a little bit more. It's kind of interesting, all right? So we're to and through, but then we rip back up, and again, we're getting little confluent zones here. So those are potentially valid pivots. Now, given that I feel like I've got 3 good pivots here, I'm going to continue to look to find the puzzle. Where's the puzzle? Well, that's the modified shift. Let's go back to original and look at that. That's just the kind of thing I would do. Okay, so that's kind of interesting to me. So if I'm establishing the significance of these pivots before I start making projections for them, right? So the fact that we were so technical through all of it tells me that I've got good pivots. So I'm going to pull this off now. So this seems to be containing it, right? So here's our corner pocket trade right here. So we love this trade. Right, so from that, if you were looking to get long there, the expectation is you're going to at least make the median line. We're to and through, back, tap it to the outside edge. So this seems to be containing the market rather nicely. So then again, if this is my low here, good pivot, I'm going up here. Here's my swing high here. Well, interestingly, this is the kind of confluence that we like to see. So I've got a combination. I've got market structure. I've got market geometry here based on the 3 pivots that I've established as being significant. And I come here and I've got a confluence zone where I'm hitting the 786 of the length of this swing low to this swing high. Right, so potentially I've got a 1-2 because I know that a 2 wave can come as deep as a 786. That's not uncommon. Right, and then from there, right, we've got the classic corner pocket. We've got 80% odds of getting to the median line, and we finally make it here. So you look at that and go, okay, well. Okay, so it continues to be technical. So if indeed, now here's where, now I'm on the 4-hour, so I might open this up a little bit and say, well, if that's a 1-2, what am I expecting now? So if I'm going to label it that way, could the Elliott wave here be helpful to me if I've got a 1-2? Well, I'm looking for a 3, 4, 5 up here, right? And so let me. Of course, there's the algo target, right? You see that from the swing low from low to high to the 786. We keep that negative 23.6 up here. So we have an algo target off of that, and you can see having hit that, we've come back down. We get the outside edge here, so I would want to measure that. Is that significant to me? So from my swing low here to my high, why? So the question you're asking, why does it stop there? So interestingly, so if I had this as potentially the start of my third, I would want to see that stay impulsive, and it's not impulsive. So here, this is a bit of a tell. So the fact that it cannot be my third wave, right? Per Elliott rule set, it cannot be a 1, 2, 3 that's underway with this as a 1, 2, 3, 4. Can't be that because I overlap the 1. I cannot have a leading diagonal in my third. It has to be an impulse wave without the overlap of the 1. So that was the tempting labeling to go, oh, well, there's 1, 2, 3, big 4. Maybe that's my A, B, C. Can't be that. So we've got to reevaluate that and say, okay, well, if it's going to overlap the 1 wave, one wave there, and I know that this has got to be now an impulse because it's the third wave, what else could that be? So immediately I look at that and go, okay, well, given the depth of that correction, that doesn't look like a 4. What that looks like to me is that I've got a 1 in, that I've got my completed 1, and there's my 2, and now I'm going off for a 3, 4, 5 here of the next degree. Right? So I've got the larger degree up here. I'm going to change that, and we'll go up to a minuet. Okay, so potentially I've got a 1, 2, 1, 2. Okay, again, that would be very bullish because now looking at that, if that's right, and we don't know that it is, but if that's going to continue to play this way, and we have this nice structure, this containment of the market, well, now what have I got? I got another 1, 2. So I've got 1, 2, 1, 2, and then yet again I get another 1, 2. Right? We don't know exactly how that's going to play, but that's, if I were putting a count on it right now, that's how I would be counting it. And so now we're looking for evidence. So yet again, I need to see excuse me, I need to see an impulsive structure here to complete what now would be the third of my third, right? You see that? So so here's the third up here. So I need to see, let me put the wave on it so it makes sense to you as I'm doing this. So if I put that on, so to get to my third wave up here, I've got to have an impulsive structure here. So how will I know whether or not that's going to work? Because I need to see that the 4 wave does not overlap the 1 wave. You see, so part of that is how far do I get in the third? So I've got a wave within a wave within a wave. And then off of the 4 hour, I promise you that within that wave, if it's going to play with this in this path, within that third, it is going to subdivide yet again. It has to, because if it's going to be a third, it has to be impulsive. You see that? So if that's my 2, I got to get this. Right? A wave within a wave within a wave within a wave. That's the fractal nature of the Elliott wave methodology. And that rule set is your advantage, not your disadvantage. Because some people look at that and go, this is too complicated. Why do I need this? Well, you could really make the case that you don't. Right? You could just be, as I've said many times and shown in many videos, you could just be pulling fibs, trade behind the algos, you use the pitchforks and the median line rule set, and you'd be very, very successful if you just specialized in that. So the Elliott wave is really optional. It's a choice that you make. Do I want to put the effort in to build the knowledge base so that I know how to make that prediction? Because this is not an easy one to do. Right? You gotta know the rule set here, and you got to understand it. So I've done a couple of things here. One is I've tried to show you why that would be advantageous to you. Right? So part of it is as a swing trader, as I am, I'm looking for these swings, right? I'm not saying, oh, well, this looks great down here. I'm going to hold it for the next 2 years, so I'm just going to buy it since we've had this nice retracement. That's not the type of trading that I teach or that I take to the markets. That's not what I do. Now, you can back up and you can apply this. I'm sitting here on the 4 hour. This could be the 1 minute chart. Taken to the 5 minute, taken to the 15 minute, taken to the 1 hour. You could say, okay, well, I just trade to 1 hour and below, and I'm just a scalper. Well, I absolutely promise you, this is happening on every time frame. The fractal nature here. It's much tougher to do it the smaller the time frame because you have so much noise and you're relabeling so often. Because of that noise, because of the volatility, I prefer to trade off of the 4 hour and the 1 hour, and then if I'm fine tuning for entry, I'll go to the 15 minute. But I strongly encourage you, if you're a swing trader, to don't go below the 15 minute because it's just too much noise. And secondly, you go to the 15 minute last, not first. I have a lot of new traders that work with me that say, hey, man, I'm checking this out on the 15 minute. This looks pretty good. What do you think of this? And my first reply is, well, how does it look on the 4 hour? Where are you? Where are you in the larger count such that if you think you've got a 3-4 in play, where does that fit into the larger count to increase the probability that your analysis is right? Would that make sense if you think you've got a 3-4? So if someone comes to me and says, "Hey, I think I like this," let's hypothetically we get this right here, and someone says, "Oh, I'm thinking about buying it here because we're tapping the median line." Okay, well, where's your target? Right? Have you measured those out? Where are you wrong? Right? So we can see, again, hypothetical, if we're going to take out that wave 1, well, I can be very precise about where I'm going to be out, because if it overlaps the wave 1, it can't be an impulse because we're in a third, right? So I'm in the third of the third of the third. What kind of target? Have you measured the targets? Because just looking here, I've got multiple targets. So I've got this target. If that's my 1-2, well, at least I've got to get 100% the length of the 1. My big upside targets are way, way, way up here to that degree. Do you see that? So this 1-2, here's my high probability zone up here. Here's my 1618175 window. But then again, I've got more. Now this is where you know the chart can get a little crazy here. So there's 1, 2. I know those are up there. So what I'll do is I'll mark them with a hot box, which is you all have seen me do many times. So if I take that off, I know I've got that as a probability zone. But then again, I've got the next 1, 2. I've got this 1, 2 right here. So where's that probability zone? That's up here. That's the 1618175 target for this 1, 2. Well, then I got to do that again, right? So now I'm going to pull that off. So I've got these target boxes up here. So, well, that's this one. Well, what about this one? If this is a 1, 2, and right now we don't know that it is, but if that were to play as a 1, 2, I got to look for that target as well. There's my 1. If that's my 2, well, where's that target? Let me pull this off. Well, that target is right here. Do you see that? So if this is going 1, 2, and then I would do it again, right? So I would have 1, 2, 1, 2, 1, 2, 1, 2. Right? So then these become then it's trader's choice. You know, are you if it's going to follow? So there's your roadmap. That's your roadmap to get to here. So if it's going to follow that, then we know we have a rule set where we can qualify or disqualify it based on how it responds, if nothing else, how it responds to those wave 1s. Are we staying above the wave 1s? Right? So that's where the Elliott rule set can be really beneficial to you. So what if we do this? If we come down here, we take out that, well, what do we know then? Well, this can't be a 2. If it goes down here, well, now we know it can't be a 2. So this entire count is invalidated. So we know for sure that if we're going to break this low, then we don't have a 1, 2 here. Then if we break if we break this one, if we get this up here and this starts to go, if we break this one, well, then we're wrong, right? It's this rule set that guides you through the market. Is the market following that roadmap? Is it how is it fitting into the market's geometry? How is the median line affecting this? Look how that median line has come into play. How the structure of this geometry here from these pivots, right, that we established way back here, that those are good pivots. Look how that continues to come into play. You know, to the median line, to the outside edge. To and through the median line, outside edge, back to the median line, outside edge. Are we going to go back to the median line? Is that potentially the 1, 2, 1, 2? Are we going through it? Where is the outside edge likely to come into play up here? Are we going through the 100 to the 200 or the 150 as we did here? These are all the kind of, you know, if you don't try and organize it in some way with a rule set around it, it's just complete chaos. How would you possibly approach this? How would you know? I mean, I suppose you could say, okay, well, I just trade the internal retracements. I just, you know, every time we get a 50 to the 618, I'm a buyer. Stop on the other side of the 65. You could do that. Nothing wrong with that. And then you say, well, now I've learned a little bit about Andrew's median line, so I'm going to add those. That Elliott wave stuff is just, I don't know. I didn't have time to, you know, figure it out, understand it. I didn't want to do it, so I didn't do it. You know, that's your choice as a trader. But if, you know, it's a question of, do I want that kind of precision? Do I want to be a swing trader? Do I care about what it's doing on the 4 hour down to the 1 hour to the 15? Or I want to see what's happening on the daily, and I wait for the thing to get lower, and then I just buy it and hold it. What kind of trader do you want to be? And if you're going to be a swing trader, I think you'll find there's real advantage in getting into this kind of granular analysis. And I mean, it's not that granular. I'm on a 4 hour chart here. Right, I will tell you that, you know, this is where you can see the wave structure and the retracement structure much more easily. The smallest time frame I'll go to is 15 minutes. If I'm going below that, then I'm over analyzing. Stick with the 4 hour, the 1 hour, and the 15, and you'll be just fine. You'll be just fine. All right, guys, I've gone long. There's 28 minutes. I didn't mean to go that long, but there was a lot to see in this. So there you go. So now the question becomes, does that low hold? Right, so if we take all of this off, right now we don't know anything other than we've got potentially a 1, 2 at the lower parallel. That's all we can say right now. And if this fails, if we take out this low, then we're relabeling again. For all we know, we've just got a big A, B, C, and we're going much lower. You don't know, and you won't know There's nowhere along the line that you know what's going to happen next. It's always just probabilities. Welcome to trading.